FCX has 4 stars of liquidity, according to Tastyworks, and a moderate positive correlation to the SPY. We're going to be putting on a naked short put today that has a probability of profit that is better than 70% and a P50 that is better than 80%. So if any of that sounds interesting to you, oh, by the way, it's also an earnings trade. Okay, so if that sounds interesting to you, stick around because we're going to build out that trade next. Hi everybody, my name is Neil and welcome back to Option Theory, or if you're new here, welcome to Option Theory. Down below in the description, you'll find a link to a Tasty Trade page where you can sign up for the email newsletter that they send out 5 days a week. On screen here, we put on these trades in a simulated portfolio inside of ThinkOrSwim by TD Ameritrade. And we invite you to, of course, subscribe and join us so that you can build out a portfolio along with us and test out your trading and investing theories. All right, so we're going to move on to this phase of the videos where we build out the trade. But before that, you can see on screen here, I have the chart pulled up for FCX, and we can see here that this is our break even for this trade. And this is the probability cone that we're looking at here, and how much of that probability cone sits above our break even, right? So that's a good sign, right? More likely to end up anywhere here than we are to end up in this smaller piece. But of course, if this is all new to you and your screen doesn't look like that, don't worry. We'll go through the basics starting now. Over here in the Analyze tab, I'm set to risk profile. We're going to end up there in just a moment, but we want to go to where it says Add Simulated Trade, right? So to do that, we then want to type in FCX here into the ticker box, hit enter, and you're going to be here at the options chain. You might see something that looks like this. You want to twirl open your August 21st options. As of today, July 16th, we're looking at 36 days to expiration. With that said, we want to scroll down over here. On the right side, you'll find your puts. We're looking for the 12 put, which looks like we said, it's got 4 stars of liquidity. We're looking at a 4-cent wide bid-ask spread. Now, of course, penny wide is the best, right? But this is pretty tight, and we're looking at a 26 delta, and you can use that as a proxy for probability of it being in the money. So, right, so there, that means there's like a 74% probability that this expires worthless. All right, or you double that to get your probability of it giving you a heart attack. So it's going to be a 52% probability of touch that in the next 36 days, FCX is going to test us to the downside. All right, with that said, you come to the bid and the ask, because we're going to sell a 12 put, right? We know that our maximum risk is going to be this number times 100, which is $1,200, right? Minus the credit we're going to receive. Yes, that's only, let's call it 45, right? You could put in a mid price if you wanted to. And that's not a bad idea. Let's do that. 45, let's say we want to get filled in the mid price. And that means we're going to take on a lot more risk than you would possibly be comfortable with. So maybe we should explore some alternatives in this one. All right, let's hit this. We're going to see that we have this $45. We're going to go over to the risk profile. And if your screen looks all crazy like mine did, it was something like this, right? You can just drag on this bottom bar here to compress and see more at once, I suppose, right? So here we go. Now up here, your calendar might be set to July something. Click on this date here and you can switch over to August, which I already am. You might be here like this. Click on this arrow to go to August and choose the 21st because that's expiration. All right. Then come down here and choose set slices, go to break even and set slices to break even at expiration. And now we can see we're looking at our probabilities of breaking even or better, or probability of loss, right? So we're looking at nearly a 73% probability of breaking even or better. And obviously it's a bullish play. Anything that we, if the stock price goes up, we're good. If the stock price even comes down a little bit, that's fine, right? Because you can trade options and be wrong and be profitable. Something I've covered in previous videos, but I'm not going to get into that right now. All right, so we can now see our probabilities, but let's head back to understand and this is the mistake I made yesterday. See, we always make mistakes. I did yesterday's video and I forgot to right click, choose confirm and send. So I normally do that, I missed that. So I missed out on the trade. We should go back and take a look at that, man. I don't know if you guys put on your Amazon trade yesterday, but some crazy stuff we got to take a quick look at. So I'm going to right click this one and choose confirm and send, and it'll review with you your maximum profit and your maximum loss. Max profit's $45. We'll seek to manage that if we get near half of that, right? So $22, $23, we're looking to take this trade off. Okay, especially because we're heading towards earnings, which is going to be next Thursday, the 23rd. I don't know what day that is, but anyway, we're looking at the 23rd being the earnings day, right? So we're probably going to see a volatility expansion, right? Meaning increase in volatility. So expect this trade to potentially lose in the beginning, right? And then once the earnings hit, assuming that it doesn't move rapidly down, the volatility contraction should give you a lot of, profit potential on that one. All right, so I'm going to hit send. I'm going to throw that one into my working orders. You see here we have an order here. It says sell on this one. It's over in your monitor tab. You'll see it here as well. But we should probably take a look at another option here as far as alternatives, right? Are there any alternatives to consider? Well, with an earnings play, you might consider doing a strangle. And if a strangle is not an option for you because you're trading in an IRA and you're not approved to do short calls, you might consider doing a wide, a spread on the call side, right? You might call that a jade lizard or whatever if you're going to do a call spread. But let's just take a look here. If we went out to an equidistant, let's find the delta of, that's the closest one there. So if we went and sold a call on this side, and I have to go to this risk profile here. And I'm actually building out another one. So hit it here. Now we're looking at this one here, where we have a maximum profit potential here of $70, okay? And so almost double. And let's take a look at our break-evens on this one. So now instead of having a 73%, we're looking at a 64% probability of profit on this one. So that's an option. Okay, the problem with this one is you have unlimited risk to the upside. Should the price of copper go crazy, right, through the roof, you may not find that to be all that exciting. So you could make this into a spread. I'm going to hold down the control key on my keyboard now that I'm back here. I'm going to make this maybe a $2 wide spread here, let's say here. Okay, so now we're looking at something where we have limited risk, right? And our break-evens are a little bit narrower. So we're going to lose a little bit of the probability of profit, of course, because we're protecting ourselves. But at least we know at most we're risking to the upside is $138. And that's not bad. That's about, a third. The credit is a third the width of the strikes. So those are a couple of options here. You're not going to probably be able to make this one into a no risk to the upside trade like you would try to do with a jade lizard. The IV rank, I believe, for FCX right now is in the 20s, so it's not particularly, high in its volatility right now. So, all right, that's that. We did our analysis and our alternatives, and now I get to go to the part where I say thanks. If you made it this far into the video, thanks so much. I hope I've earned that like. Would you consider hitting that like button for me? And if you want to keep doing this with us, hit that subscribe button and ring the bell. You will be notified when our videos come out, which is when the market opens every day. All right, everybody. I look forward to seeing you in tomorrow's final cherry bomb of the week. Happy trading.